Talked a little bit this morning about how we felt like the top was in yesterday at 1552. Today we didn't even get above 1542 and change. The market has just been trending down basically from the open. We had this little false fake out on the open, and then they just took them down. The key thing that I want to point out today again is not so much stocks down slightly today. They're basically giving back yesterday's gains. But the key thing I want to point out here is the long bond and the 10-year rates. This is what I'm watching. Long bond, the USZ, is down another 1.5% today, and the 10-year is up 3.5%. Right now, trading at 46.72. So this is telling me very clearly, and with gold up at 742, the market is telling me more than Bernanke is telling me. Hey, interest rates are going higher, buddy. Gold is going higher. That's inflationary, and better be careful what you wish for, folks, and wanting the Fed to drop a rate that doesn't affect 99% of us. So let's watch what happens here. But dollars at new lows, trading 78.47 as I look here with the last 30 minutes or so to go in the day. Again, ES is trading 15.32, so that's 20 off its high. The oil is again just sticking right up here near 82. It's trading at 81.67. Natural gas trading at 6, and I think that's a buy down in here. As long as you put your stops below the old lows, I think natural gas is looking like a nice buy set up into the fall, winter months coming here. So these are the things that I'm watching. A little non-conventional than most stock folks, but transportation index down almost 2% today. That's another thing to point out. That's a huge move down, guys. This is telling you something. FedEx, their numbers were actually 1% lower in the U.S. year over year, and the home index is down about 6% here. Could be a counter trend trade there on the long side for a short term, but I think if we go to new lows on the Dow Jones housing here again, we've got a whole nother leg lower there, regardless of what Uncle Bernanke does with his shenanigans. So a lot of things are a lot of mixed cross currents here, and you've got to wonder how it's all going to play out. But traders are telling me today that, hey, we're not buying it, Bernanke. Inflation is what you need to be aware of. And I just wonder what our friend Paul Volcker is doing, what he's saying in his private conversations right now. I guarantee he is not happy. I wish we could have somebody like Volcker instead of Greenspan out there speaking on what we should be doing, which is raising interest rates right now, slowing this economy down. It's already slowing down. Why are we lowering interest rates when we're at 200 points from an all-time high in the Dow? That's a question you've got to ask yourself. I've never seen a Fed, I think if you go back in history, you've never seen a Fed lower rates when we've seen such high prices on your Dow Industrial Average, your S&P averages, all near their highs. Why are we lowering rates? That's a question I would be asking and sending letters to your congressman. There's very few Ron Pauls out there, but folks, this is the stuff that's going on. You got to ask yourself a question. Stay away from the free markets. Let the markets adjust. Let those that took out silly loans, let them take the heat. And the economy will be stronger for it today if you take the heat now rather than delaying the inevitable. That's my pedestal thoughts, and hope you have a great afternoon. It's a nice late summer day here. I'm going to have lunch with the wife and football practice after. So peace, have a good afternoon, and again, be careful watch what they're doing, not what they're saying. And I think the market is saying a lot today by how it is trading with, again, 10-year up 3.5%, up to 4.67. Big bounce with the Dow futures down now 39 points. Not a big move there. So it's not so much the stocks that I'm watching versus the bonds today. I think that's the story.